Do you believe that you're better positioned now than you were 2 years ago to deal with the failure of a large bank?
I think there's quite a bit more work to do to fully implement all that Dodd-Frank has put on the table in terms of living wills, resolution, prudential requirements, and so on. I think we are better off today than we were 2 years ago, but I would say that it will still be some time before we have completely implemented not only all of the rules in the context of Dodd-Frank, but I think very importantly, and Chairman Bear has taken the leadership on this, we have to negotiate and coordinate with international regulators because so many large institutions are cross borders. So we'll need to work together with other institutions. So we have not got to the point where this set of tools is fully implemented, but we're working very hard, and it certainly is a focus of the Fed and the FDIC to get the resolution process up and running as effectively as possible.
Are you more diligent than you were 2 years ago, the Fed as a regulator?
Well, Senator, certainly we've all learned lessons from the crisis in terms of...
What have you learned?
Well, the importance of being very aggressive and not being willing to allow banks too much leeway particularly when they're inadequate in areas like risk management, where it turned out to be such an important problem during the crisis. So we've done a lot to try to strengthen and improve our supervision from a day-to-day basis, but we've also, and I don't want to take more time than you'd like, Senator, but we've also done a good bit to restructure the internal process so that we have, for example, a lot more interaction between the supervisors and economists and financial market specialists who have different skills they bring to the table to give us a broader perspective on what the bank or other institution is doing.